Let's talk about the markets in 3 minutes then, Mark. We're going to get some data points out today. We'll get PMIs out from various European economies. We'll get the ZEW number out from Germany. The latter of those has been improving a lot since the month of September. I wonder what you expect the sort of messaging to be coming through from some of this data. We've seen improvements in recent months.
Look, the picture for the European economy has been shifting massively more positive over the last couple of months. For the globe, it's been turning more positive. It's not just the China reopening, but we know that the UK, we've talked about this in the show, had peak pessimism back in December. We know that the US has still avoided a recession. The jobs market stays hot. So generally, it's this theme that the economy is looking better. Now, I do focus on the European numbers as being less important that the US flash PMIs will also get later today, just because when it comes to the financial markets, it is still the US yield story that is more important. So Europe is very important for economic reasons, but for the yield story, it is more important to know what the US data is going to do.
Okay, so more important to follow that US yield story and the US data that goes alongside with that. More important than perhaps to track what happens to Treasury yields for other assets. I'm thinking here about equities, because I know on the Markets Live team, you've been thinking about just how many hikes we're going to get from global central banks and just how long rates remain at these, relative to recent history, elevated levels. What's the latest thinking from the Markets Live team?
Yeah, well, so my colleague Ven Ram has done an excellent macro review today, kind of arguing that the Fed, ECB and the Bank of England will all go much further than priced. And obviously, this very much suits my kind of view in the market. Everyone in the team is entitled to their own view, but Ven is very much in my camp that central banks can go much further. And he's talking about the Fed going to 6%. I think, we have the Goldman economist came out overnight saying 75 basis points. This is pretty much now consensus in the market for everyone apart from equities traders. US equities traders are maybe in a little bit of denial and a more optimistic mode when it comes to yield story.
We saw a bit of interesting movement on JGBs, 10-year yields on JGBs going above 0.5% for the first time since January. The market perhaps wanting to test the resolve of the Bank of Japan. And I know that's something also that as we look ahead to learning more about the new potential governor at the BOJ and thinking about the handover and risk events that are on the calendar, I know that the team's been thinking about that, Mark. What's the latest thinking around the BOJ?
So he has his confirmation hearing on Friday in front of Parliament, and there'll be a little bit of excitement about that. But the really big dates are, first of all, we have Kuroda's last policy meeting. There's a tail risk that Kuroda tweaks yield curve control policy once more before he goes. I emphasize it's a tail risk. It's just probably a greater tail risk than is priced by the market, but it's not the base case. Then we come to when will Ueda-san change policy himself? And I think that the consensus is very much for the second half of the year, and I think it'll be later than the market is pricing, if anything.
OK, lots to watch then when it comes to the BOJ, the yield story, the data coming out of the US and Europe a little bit later on this morning. Remember, you can get up-to-date analysis on all of that from the Markets Live team. MLIV Go is the function to use on your Bloomberg terminal.